Good day, everyone. We've got a market that has bounced with a lot of leaders issuing pocket pivots and viable gap ups. So that's always internally a sign of strength. Keep in mind that the market bounced in mid-December, and after a couple days, that the strength of the bounce really petered out fast. So we're going to have to watch how leaders perform over the coming days. The MDM is on a buy signal. Went to that buy signal at very close to the open yesterday, so I was able to enjoy some of the gains. Now the market's giving back those gains, but that's to be expected. Sometimes when you get these fairly short and sharp bounces, you're going to get some volatility and some backing and filling. Right now things are looking more on the bullish side than bearish, just given the nature of how many of these actionable stocks have come through. We didn't have that situation in mid-December when we had that bounce. In fact, you might remember there only a scant number of actionable stocks at that time, and then of course the market rolled over into the new year. So right now, it looks like the market, in a grand sense, it could be putting in a major top, but on the other hand, if the market really starts to fall, then I think the Fed would probably have no choice but to step in with some form of QE4 announcement like they've done every other time. Meanwhile, the price of oil, as far as its downtrend, doesn't show like it's going to be letting up. It's down again today. It looks like it's hitting the USO, which is the U.S. oil fund, is plumbing new depths today on an intraday basis. It hit new lows. And so the speed of the decline doesn't seem to be slowing, which of course can rattle markets quite a bit. It rattled Russia, it rattled other countries, because these types of moves are so sharp and sudden, it can be destabilizing to other economies. So we're going to have to wait and see where oil actually does find its floor. That'll probably cause a nice market rally when that happens, but in the meantime, if oil is just going to continue this steep drop, the general markets could get pulled back down along with it, especially if we get any further news from countries like Russia that this sudden drop in the price of oil is causing mayhem on their economy. We also have, with the sudden drop in price of oil, we have the Commodity Research Bureau Index, which is falling along with oil. And so, on the good side, that means this is sort of a form of QE. You have deflation. You have a lot of commodities that are much less expensive. So that can be good for economies. But right now, things look pretty tenuous in terms of the price of oil. So we'll have to see how the leading stocks play out in the coming days ahead. Gil?
Yeah, I think the bottom line here is to watch how the indexes hold the 50-day moving averages, because you had a 5-day breakdown. And for those of you who are in the chat room on Tuesday, you recall I pretty much called the bottom. I don't mean to brag or anything, because sometimes I don't call the bottom, but in this case, you could sort of see, well, not sort of, you could actually see that after 5 days down, and the biggest range is on Tuesday, you're approaching the lows, and everybody suddenly is bearish, and the same indicator always comes in at the same time. After you've been down several days, I start getting all these emails from people who want to short every stock on the planet. And one of what I thought was almost the most comical email we received, I think, was Tuesday night, from a guy who's actually not a subscriber. So I guess he was thinking he was going to slide in and get some free advice. And we don't provide personal investment advice, so we weren't going to bite on it anyways. But he comes in and he says, IBD says the market is in correction, and I agree. And my first thought was like, well, really? Well, what took you so long to figure that one out? And then the guy wants to short this stock, CEMP. Why? Because he thinks it's a climax top. And I don't know if this is or not. It seems a little bit soon for that to be the case. But it also shows that the guy has no clue. He has no clue with respect to our methods in short selling. And so I don't let things miff me that much. Most of the time I'm just joking around when it sounds like I'm ticked off at somebody. But I think it's pretty stupid to email us with something like this when you really haven't bothered to read our books or even understand anything about our method of short selling. But all this just speaks to the idea that all of a sudden everybody wants to short. You're down 5 days in a row. Everybody wants to short. And a lot of the shorts were set up in here as the market was starting to roll over, and IBD goes to market in confirmed uptrend, or I don't know, up into an uptrend that's under pressure. I guess maybe they got a half right, and then they went to marketing correction right at the bottom. And yesterday they went to market in confirmed uptrend. The market direction model went to buy signal early in the day. The thinking there is you're pushing above the 50-day on strong volume. In the past, when you've been able to do that, that's generally produced a decent rally. And I think also if it can hold, then you may have a chance of moving higher. But it's still January. It's still early in the year. And I wouldn't get too excited about all this too much. And I certainly wouldn't be chasing things. I think the market shows you what happens to you when things start to get extended on the upside and you come rushing in late, or you're reacting rather than planning and anticipating. So I use the analogy, mainly because I was watching one of those nature shows the other night, of a lion waiting in the grass. And what I think is interesting, even though the lion may be hungry as hell and hasn't eaten for a week or two, it remains disciplined, and it sits there waiting for the exact right moment to strike, and no sooner, no later. And when it has the exact right moment, it will leap into action. But you have to admire the lion's discipline because it knows to wait. And I often think lions would make great traders. But in any case, for my approach, well, let's say with respect to my approach, I'm looking for things pulling in on voodoo pullbacks into moving averages at the top of a prior base. And VA I thought was a good thing to buy on Tuesday off the 20-day moving average. It ran up to the 10, pulled in, gave you another chance to buy on as the volume was light. And then this morning it launches higher, but I would expect some resistance up in here. So I'll sell into this because the other issue here is that you will have earnings coming into play, I believe, on the 28th or towards the end of the month. And I don't think I really want to hold anything into earnings unless I have a huge cushion on it. I think you're still in a tenuous spot here. Somebody's asking us a question, would you dump CUDA? Well, would I dump CUDA? Well, first of all, I wouldn't be dumb enough to buy it up here. I mean, I know that's a buyable gap up, and you can act on that basis, but I wouldn't be buying it up here. And if we're going into earnings and you see a big move like this, I probably would sell into that. So now you're pulling back into the 10-day moving average. I think it's a silly question to ask us what we would do. The question is, what would you do, and what was your plan for the trade? What was your stop if it didn't work? Not, oh my God, my stock's down, and I think I'll ask Gil and Dr. K if I should sell or if they would sell it, which I think that question is indicative of somebody who really has no business investing, and that's something they need to correct, because you should be able to figure this one out yourself. Is that's a viable gap up? Is it violating the lows of the viable gap up enough to cause a violation, a clear violation? Not really. What was your stop when you took the position? Or were you just buying it mindlessly because it was a viable gap up? And you assumed it would work, and if it didn't, you were going to come running to somebody else to tell you what to do. And I cannot emphasize any more strongly that this is not the way to invest. This is not the psychology you want to have. So you need to kind of get that together. So Dr. K, another person asked, and I think this is the more intelligent way to put it, is today's action a failure of the viable gap up of 2 days ago? Dr. K.
Well, it's undercut the low by 1%. So you have porosity. Typically, you should give stocks typically 2%. If it's very volatile, maybe even a little more than that. So right now, I mean, it's come down to its 10-day and it's bouncing. So and it's undercut it by 1%. So if you're sitting on a position, you should wait and see what it does from here. But keep your stops really tight on this one.
You could use a 10-day. A failure through the 10-day might be a way to handle it. Usually the way I'll handle something like this, if I buy a viable gap up and And so that's wherever I buy it in the gap up on the gap up day. If it's below where I bought it, I just dump it, and maybe I'll buy it back if it comes in to a logical area on light volume. So, but I act very quickly, and I don't give things very much room, primarily because I'm running big positions when I do buy something. But CUDA isn't something I would buy because it trades 277,000 shares a day. If I'm going to mess around with the cybersecurity stock, I like the thick ones. I like PANW. Cyber's a little better. But as you can see, it's retesting its 65-day moving average today and not really going anywhere. I did buy a little bit off of the 65-day on Tuesday, and it did move up a little bit, but I sold that today because it wasn't really going anywhere. Amberell is a big story. That was a great buy on Tuesday. Coming off the 10-day, you had a gap here, and the thing was off to the races. But by that time, you're up 4 days, and you're really up 5 out of 6 days. And I'll sell into this. But that's a strong stock. And at this point, I took a nice profit in the position and just kind of let it flop around here as the market flops around. This stock has a tendency to run up and then pull in. So it's not clear to me that it's just going to launch to the upside from here. And if you're able to catch this thing in here early, you know, that's a pretty nice profit because you basically have about a 10% profit in 2 to 3 days. Somebody says, heck, I'm just scared to email you guys in general, and I have read the books. Just so you know, even if we send you back a nasty email, it will not bite you. Emails so far do not have that capability. So, you know, be bold. Be like my buddy Scotty that I had dinner with at the HCS Investor Conference. He doesn't care. He'll ask me any dumb questions. Sometimes I think he just does it to see if he can get me going. Anyway, somebody says, is VDU 40% below the average volume? No, it's 41.9876254%. Below. Discerning a volume dry up is like, okay, look at the chart. Is the volume drying up? It's like there's no. Again, you see, people want certainty. They want this sort of precision that they can tell, you know, the precise number at which it's a voodoo and which it isn't. I think a lot of it is contextual. And I'll give you an example. You know, VA is pretty simple. You can see the volume is drying up as it pulls in to the 20-day moving average, and then yesterday it dried up a little bit more as it pulled in. And I just noticed early in there, I think it was minus 61% or something like that early in the day as it was coming into the 20-day again. I thought that was a place to really load the boat, and the thing has come out of here pretty nicely. But in this market, that may be all the move you get for now going into earnings. But a voodoo is, you know, in general, I just think of it as like minus 40, minus 45, minus 50. The lower the better, probably. But also, you have to look at it within context of the volume over the prior few days. And if it looks like the selling is drying up and the pullback is taking 3 to 4 days, it's probably washed out on the downside. So that's, to me, what a voodoo pullback is. And it's contextual, so it's not something that you measure with a ruler and then make a decision based on what the ruler tells you. So, you know, as always, in the market, you have to exercise judgment. And just applying rote rules like some automaton, I don't think it's going to work, and particularly in this market. So, someone else asks, if MDM goes to a buy or sell, do you recommend buying or selling around the market price then and there, or do you employ any other approach? I don't pay attention to. I don't trade the indexes myself. I pay attention to what individual stocks are doing. Dr. K, you want to take that?
It's then and there. You know, when the signal is issued, then you then buy or sell.
Yeah. Alternatively, you could wait for the moon to go into the 7th house and Jupiter to align with Mars, if that provides you with the certainty that you seem to require. When using the 20-day exponential moving average as a stop on a short position, do you look for a violation or just a move? Well, I don't know. It depends on what's going on. Sometimes I'll go a couple of percent beyond. Again, you know, you guys all, you want precision, you want certitude with respect to stops, as if there are magic stops that ensure you won't get shaken out. Basically, when I short anything, I just decide how much I'm willing to lose. And I try to work that around a moving average. So I'll give you an example, because I know some people were a little slow on this one the other day. If you're shorting Twitter in here on this rally into the 20-day and it just scoots past, and you can feel it. I mean, the volume's up big, they're pushing it. I just get out of the way at the moving average for the most part. And then you could have come back at the 50-day and hit this little one-day break. I don't know what it's doing now, but a lot of times it may go 1 or 2% past. But what you do is you're using the moving average as a reference point. And then you're deciding, based on that reference point, how much are you willing to lose on the position. And that's really how stops work. Stops are not, well, how many percent past the moving average do you allow it to go? Well, 3.9824678.9%, you know, and not a thousandth of a percent further. So again, I just want to get back to this point that you'll hear me make constantly, that investing is not about trying to derive some precision or these magic stops. It really ultimately, and I go into great detail on this in the new book, stops are all about how much money you're willing to lose on the position. You know, Livermore would set a 10% stop. I can remember when I wrote the first short selling book, Bill, in his pamphlet that I had originally been inspired by on the short side, you know, you said use stops. You have to give your shorts more room and use stops of 10 to 12%, which to me seemed excessive. Because to me 10 to 12% is letting things get out of control. But I think it all boils down to how much of a hit are you willing to take to your account value. I mean, it's that simple. What was your buy price on VA and Grub? Well, I bought them off the moving averages, near the moving averages. Other than that, it's really none of your business. All I can tell you is that I'm annualizing at about 600% for the year. Based on the first week's performance, but we'll see. Somebody says, I don't have a position in CUDA, but I would be selling on this volume. And as far as I'm concerned, that's an intelligent way to play it. It doesn't seem to be giving you any love, so why sit there like an idiot and just get run over? Anyways, what else? Can you recommend a good investor psychology book? Dr. K, you want that one?
Investor psychology. Well, I mean, you know, the Market Wizards books are fantastic. You know, Market Wizards, the new Market Wizards, and then he's done more in the series over the years as well. And there's so much trading psychology in those books that you'll find yourself reading them more than once.
Yeah, I like Trade the Trader is a good one. Wasn't there another book put about by a guy named Ari somebody? Dr. K is called Psychology of Trading or something like that. That was pretty decent. But I think a lot of learning about the psychology of trading and investing is learning about yourself and what you're like. You know, someone on the chat room I thought was pretty intelligent about talking about how they approach the market, and they don't take the same kind of risks that I do because they can't deal with it, but they do okay. And if you hammer out 20, 25, 30% a year on average over time, you're going to make a lot of money. You're going to be quite rich because it will compound out very nicely. But understanding that and understanding what your mind can tolerate and what sort of pressure it can tolerate before it starts to overheat, shall we say, and make really dumb mistakes, that's a critical part of investing. And so you find yourself panicking about things, and I think you're probably too heavy, too quick, and I think if you find yourself panicking about everything, you probably shouldn't be investing. I was joking about creating an aptitude test for traders and investors and asking some very basic questions, because I think a lot of people just are not even close to becoming psychologically suited for investing, and probably never will.
That's what Coda does, but he doesn't have a formal test. He just asks the right questions
Right.
and can tell if someone is ready, and many times he'll just say don't trade,
Right.
unless you can check these things about yourself. In answer, also, there's the Robert Koppel books are excellent. He's the guy who made tens of millions and then blew up his account because of his ego, and then lived to tell about it and made it back. So the Inner Game of Trading is really good. There's also the Intuitive Trader. They're both by him. Yeah, he's a great writer, and he talks about it from his perspective, and the psychology that went into how he did what he did and why the mistakes he made and how he was able to rectify those.
Yeah, and we talk about that in what chapter of our first book? We go Falling Forward is the title of it. What do we?
Oh yeah, the Failing Forward chapter is really good. Anyone should. This is chapter 4. But yeah, I mean, the first part of the chapter is the psychology of success lies in taming the ego, and then learning from our mistakes, problems, situation, solutions. They're all really. Everyone should read that chapter if you don't read anything else, because it'll help you just stay on track.
Yeah. So, anyways. Another one is called Trading in the Zone, I think is what somebody's mentioning. Somebody else is asking, which tool do you use to assess intraday volume? Well, let me show you something. HES Investor, they just updated this, and so you can go update intraday now. So it's going to update the system based on current prices or what's going on. Actually, it's 15 minutes delayed, which I think is reasonable. And then what you can do is, once this finishes processing, give it a second. Okay, that's done. Then what you can do is go to their warehouse view here, and you can type in all securities, and there we go. And then you can line them up. Let me line this up here, make it nice and big. You line them up, but you can see what's moving. Basically, if I want to, I can filter this. You know, price up, price down, so looking at everything that's up on the day rather than what's down, and you can kind of cruise through this. If you want to, you can sort it by ERG, so you're going to get the best stocks at the top, theoretically. Let's see, where are you? Everything's zero right now. What's up with this? Oh, I may be going the wrong way. Whoops. Yes, you kind of get a sense of some of the better stocks. You can see Agios Pharmaceutical is up. Acorn is up. And if you double click on them, it's going to bring up the chart for you. This is this is as of 15 minutes ago. So, you know, you can flip through them and you can see what's going on. And then if you want to, if you have a live charting system like eSignal, you can double check the chart. You know, right there. So it's very useful. Somebody says, I get the impression from your lambasting my CUDA question that you do not want us to blindly buy when you report a BGU or pocket pivot. You want us to learn to identify themselves and buy based on our own identification. Well, no, I think it's you can operate on the basis of our report, but again, think about where you're buying it. And when you do buy it, you have to think about where your stop is. In other words, you know, assess your risk and how much you're willing to lose. I think that's really the key point. Not necessarily when and where you buy them, because sometimes you buy them a little extended and they just keep going higher. But I think in general, if you're relying on someone else to tell you when you need to get out of a stock that you bought based on a report that we sent out, and remember, our reports are not intended as investment advice or even a real-time alert in the sense that buy this here now. It's more, here's a technical condition, an objective technical condition in a stock that is actionable, but you've got to know, you know, how to handle it. If you buy tiny positions initially, you can probably buy anything anywhere, and if it comes in a little bit, maybe add to it. I try to be more precise in finding the inflection points and keeping my risk to a bare minimum, because I take huge positions, and that's what I did all year last year. I took huge positions mostly on voodoo pullbacks, volume drive pullbacks, and I wasn't buying anything up. I wasn't buying a pocket pivot up. I bought maybe one or two Bible gap ups, but kept that pretty tight. And so for me, my psychology, I can handle a big position. I can handle all the wiggling. And I can handle a 10% drawdown over a few days. That doesn't freak me out. It does freak out a lot of other people. But I think the bottom line is what we want you to do is when you make a trade based on an observable, objective, technical condition in a particular stock, then we want you to at least think about and implement a plan based on how much you're willing to lose on that trade and what your objectives are for the trade on the upside. You know, if you're just buying things blindly without thinking about, you know, what you're expecting from the trade and how much you're willing to lose, then you're what we call in the chat room a panda. You're just not thinking, or you don't want to think. And I understand a lot of services and newspapers out there promote the idea that you don't really have to think much and just follow their simple rules, and 1, 2, 3, you'll be a rich man or a rich woman. So But I think that's what we really want you to do. And, we're trying to teach people how to improve as traders. And so, I sound like I'm getting mad. I'm not really, but I will kick you around. So O'Neill used to kick us around. I remember if I asked him a question that was dumb, I'd get first I'd get this long. You hear this big swoosh of air coming through the phone, and then you knew, here comes a train, and he would come and just start barreling you, slamming you around. And
I think that affected your volume when you just did that. You're coming in really quiet now.
What's that? I'm coming in really
you're
quiet.
better now.
Oh, yeah, because the system actually adjusts to it. Yeah, it's too smart for its own good. Anyways, let's see. More questions. But all I would say is just keep learning, stay optimistic. It's fun. I think all this is fun. I mean, the fact that I just get to do this for a living is incredibly fun. Anyways, I don't know, these stocks that I've liked, VA, Umbrella, Grubhub is another one. They seem to be acting okay. Market's a little choppy here, though, and I wouldn't be surprised if we chop around a little bit. We'll see. Anyways. Any other questions? So, Dr. K, do you have the list of, here's a pocket pivot yesterday, 5 out of 6 pocket pivots. We put out, there are some others we put some pocket pivots out. I think it's a viable gap up. Again, if you bought this, you're using the 150 level here as your guide for a downside guide for a stop. Somebody's asking about Zyop. Whoops, not Zip, but Zyop.
Biotech, low priced, huge risk because it's thin. It's bordering on microcap. Hugely speculative. So this is also in the pattern. You're putting a lot of risk on to take a position in something like this.
Yeah. But if you like it, where's your stop? Again, so the stock. So all it's doing is holding the 10-day moving average. So if you have to ask us that to figure out what this thing is doing, then, like I said, maybe should not be trading. Okay. Illumina, that was another one that we put a pocket pivot alert here. That was here. I mean, this one I'm skeptical of because it's in this big structure, and it's kept trying to break out and it can't. And my guess is it's probably not going to. This probably isn't going to work. It's probably too late for it, but I could be wrong. I mean, if you bought it, I think you're using the top of the base now, which maybe you could set here at, what is that, 191.64 as your ultimate stop on the downside. JD.
Yeah, I mean, it's got the earnings in its favor and, the acceleration of earnings and sales. I mean, it's got enough fundamentals that check the box. So, trading this one, just, like we always say, just always know where you're going to exit your position, and you should always make a habit of that. Whenever you put on a position, you'll know exactly where you're out.
Right. Let's see.
And if it goes back into the base here, usually when stocks go back into their base, that means they're going to just be going sideways a lot longer. So that, that's a clue to where you might want to put your stop in this one. It might not go back into the base. I mean, the idea is that it will continue on higher, provided the market doesn't just start rolling over and playing dead. But enough looks good on this one that if you're sitting on a position, then keep your stops tight, because if it goes into the base, it's probably failed.
JD.com had a pocket pivot yesterday. It's trying to, whoops. Let me get this out of here. It's trying to create the lows of a base. So you got this pocket pivot. It's kind of moving. It's trying to come up, but it's not really getting anywhere. So I don't know. This one's a tricky one. If you wanted to buy this pocket pivot on the basis of it being a big old bottom fishing pocket pivot, I'm not sure you're going to be that successful. I don't know. It's hard to say. Someone says, do you try to diversify among sectors or groups in your portfolio, or just look for more good? Well, if you read any of our books, is there anywhere where we say that you need to be diversified among many sectors and groups? No, I focus on the best stocks and the best groups, or the stocks that I think have the best chance for big upside, and I concentrate in very few positions. And sometimes I might be in nothing but the same group, but because it's all based on what the stocks are doing. I'm more of a, what is it, bottom up or top down? I forget. If you focus on the stocks and get less fixated with diversifying among groups and all that other anal portfolio management
Bottom up.
stuff. What is that called? Bottom up. Yeah, I'm more bottom up. I'm not.
Top down is looking at the economy, looking at macro, and filtering out down from there. We certainly don't do that, and
Sounds like a broker question. BITA. I was actually treating BITA as a short in here when it was failing at the 65-day, but then you have this gap up above, and that was a pocket pivot, and the stock's back to the high. So if I had bought it in here, which, I got to tell you, I looked at this thing, because I tried shorting it on this day, I think it was, or this day. It ran up to the 50-day. I shorted it, got a little bit of love, and it came down the next day, but then it bounced back up here. I covered, took my profit, not a small one, and then I saw it, and I looked at it, and I thought, this thing probably wants to go higher. The other thing is being shorted. This would have been, what, Monday and Tuesday? Well, on Monday is when I shorted it, and Tuesday. I was just getting the sense that this thing doesn't want to come down. And it didn't. It gaps up here, and I looked at it, and I thought I should buy that, and I didn't, and it just continued higher. But I'm not going to buy it now. That's way too extended. So, 2 questions. Does Dr. K use volume dry-ups? And 2, how did Dr. K do last year overall? I don't know. I don't think he needs to answer the second question. Dr. K, do you use volume dry-ups?
1 second. Just let me get a glass of water there. Volume dry-ups, yeah, they do work. In fact, they've worked in many different types of markets. I remember in 1996, one of the senior guys there with an excellent track record, he didn't call them VDUs, but he showed me patterns where he likes buying on weakness. It suited his trading style. So he'd buy stuff on weakness on the basis of volume drying up. That was never my style. I always like buying on strength. That still is my preference. However, I will use the observation. If a stock has a nice volume dry up, then I may take a position when the stock starts to show strength.
Yeah, and I'm just going to point out that we're not really here to disclose our performance year in and year out. I've talked about it this year because I think it's instructive, because those of you who've been following on the webinars understand that there's sort of a different, a little bit unorthodox tack that I've taken over the last, I'm going to say, year and a half. Actually, since I got out of the hospital in August of 2013, because I remember by August, when I got out of the hospital in August of 2013, I was basically flat for the year, and I ended up 52% because I shifted all my approach entirely. And it worked. And last year it worked really well because I perfected it, and I got a little bit better at not doing so many dumb moves, and also this analogy of the line in the grass, of trying to be the line in the grass and just waiting for the setups. Because I noticed, even looking last year, I could have done better if I had been a little bit more patient, although I think I was better at being patient in 2014 than I was in 2013, or the second half of 2013. And you could say that I did 100% in 2013 if you figure I was flat, and then I got out of the hospital in August and got everything shifted. But I think that whole experience really changed my perspective on a lot of things. I think opened my eyes to a lot of things, including the market and what was going on. And so that's why I talk about it. But if we have a good year or bad year, what does it matter? I think it's really funny because you get some dorks on Twitter who, in 2010, they'd all be wanting to hit me for my crappy year in 2009, and like, well, you're only as good as your latest numbers. And now, if they see that I'm up 115% for 2014, they want to go back and talk about 2009, which gets back to what their motive is in the first place. Is if you're a successful person, People just want to tear you down when they can, and that's fine. If they want to spend their energy doing that, then they're not going to get anywhere in life, and we just ignore them. But I think it's pretty funny how you get some of those people on Twitter, on the internet and whatnot, and you just kind of wonder what drives these people, But I just saw the movie, The Interview. They hate us because they ain't us. That's it. Anyways, let's see, where are we? Somebody, yes. LRCX is short here. High of day is stop, and 76.40 is a profit target. Well, it looks like you've already figured it out. So what do you need to ask us for? You need us to bless it? How does that? What did the priest used to say when I was a kid? He used to get a catechism of Omnino Domino Santa Maria. Okay, your trade is blessed. Go for it. You're guaranteed profits now. Come on. Get a clue, will ya? Okay, yeah, so it's rallied to the 50-day. What makes you think this is some big leader to short and that's going to blow apart? If you want to short it here and you know what your stops are, then you're good to go. Do the trade. Don't ask us to bless it for you. But I don't see it as a big leading stock that is going to blow apart. Maybe it does, maybe it doesn't. You can see a little fractal head and shoulders, and I don't know how this shows up on the weekly. Yeah, you see it a little bit. So hard to say, but your upside volume on the weekly chart is a little better than it is on the daily chart. Anyways, you mentioned upside objective. I usually use a floating stop and let the market stop me out. It gets me out of setting an upside objective. That makes sense. Use a floating / trailing stop, and you're good to go. Market's still chopping around, so I don't know. I took some profits this morning, and I'm just going to hang out. I don't see things as being all that ripe. I think the ripest points are at the inflection points, and when somebody, or rather, when everybody starts getting all excited about the market moving one way or another, it's like I read an article with Warren Buffett, or interviewing Warren Buffett, and he's talking about how the market's like your drunk uncle or something, and he gets all excited and starts buying everything in sight, and when that happens you sell to him, and then he gets all depressed. He's a manic depressive, and then he gets all depressed, and he wants to sell everything at any price, and that's when you start buying from him. And I notice that's why the voodoo pullbacks I think work so well, because once things get really ugly, and the ugly duckling is in play, and you see things coming into moving averages or logical areas of support on light volume, then I think you're in a good position maybe to step in and take some as little risk as you can if you can find a spot. I thought somebody did something on the chat room I thought was pretty smart, and they did it because as a pullback to the century market, which is 100 on BABA. You're undercutting this level. You're breaking through the 65-day. This thing's violated the 50-day moving average, so it may still roll over, and it's only rallied up to the 20-day, as you can see. But you undercut here, and on Tuesday, you can see buying it there, you'd get a little bit of a 3, 4, 5% move, which is not bad. I think that's similar to my approach. And I think that works in the market. Now, if you're trying to jump in on this thing now, there's nothing there to buy. Apple was another one, and somebody asked me about this in the chat room, I think on Tuesday. And as I pointed out, it's a similar situation in that you did undercut the low, so that sets up the potential for a rally, especially with a stock like Apple, because it's a big stock index name, and so it rallies up into the 50-day. Now, you've already violated the 50-day, and if you made this trade, see, if I had bought this here and it runs up, I'll sell into that move. I won't try and be a hero and see if I'm going to play it for a long-term gain, because there's a lot of selling in this pattern. You can see all the heavy selling, not a lot of buying, and even Carl Icahn was a little bit iffy on his whole investment thesis. And I think a person talking about using a floating stop and letting the market stop me out, Joel, I think that's a smart way to approach it, and that warms my heart, because it shows that you're learning to think and employ methods that make total sense and probably are consistent with your own risk psychology or risk profile, risk tolerance, whatever you want to call it. And I think that's an intelligent way to approach the market. So Next time we'll let you run the webinar. Let's see. My guess, somebody says, if Will Danoff owned Zyop, you would look closely at its technical attributes. Not necessarily. I mean, Will buys. I would watch and see how much he's buying. My doctor, my urologist, told me about this back in August of 2013, I guess, and it was trading about $3. It's had to move up. It's had to move down. But it's like any of these biotechs. You know, look at this. I mean, what is that? So now it's starting its great, move to new highs. But I don't think you'd see Will Danoff buying a stock like this at all. So that's a way too hypothetical statement to make. Mainly because he couldn't buy much of it, and if he did, he'd probably run it up $5. You wish he started buying it. In FAQ, you say, I guess that's what you mean. You say the pocket pivot price is the close of the pocket pivot day. In other place, you mentioned buying as close to the 10 DMA. So why not use the cross of pocket pivot bar and 10 DMA as a pocket pivot price? Dr. K, you want to answer that? Do you understand what that means?
Wait, I think I do. Buying the pocket pivot price, the optimal price is going to be based on the price volume leading up to that pocket pivot. So that optimal can be at the top of its range or close to the moving average. It's contextual. So there is no one right answer of where is the best place to buy a pocket pivot. It really all depends. That's my best answer for that one. We talk about it a lot, and you can look at the FAQs. We talk about pocket pivots extensively in there, also in our books, in terms of how to judge the quality of a pocket pivot. Yeah, I mean, I think you just, there's no easy answer to this. It's kind of like back in the days of the base breakouts. Where's the optimal buying point for a base breakout? Well, it depends on the base. It depends on what the market's doing. It's all very contextual.
Right, and again, you're trying to implement some sort of precision. So, like as an engineer would, if X equals this, then you take action. I'll give you an example of Grub. Here's your first pocket pivot right here. So it runs up, the next day pulls back into the 10-day. That's a point to buy the stock. It runs up again, and each pullback after the pocket pivots could be seen as a place to buy. That's how I like to get them. I don't like to buy them up like this. I don't even trust this move up here. I think you may still have some overhead resistance from the left side. Earnings come out later this month, but it is showing a lot of strength. There is some talk of them being bought out. But they talk about everybody being bought out. So I'm not necessarily sure I believe any of that per se. Somebody says, I may be wrong, but I think your strength was in taking large portions and compounding. I had stock running 100% gain, but were 5% of my portfolios, and losers that I cut at 7 to 8% but made 30% of my portfolio. Well, yeah, I mean, your issues are probably twofold. Number one, you're wrong most of the time. And so if you're wrong most of the time, and you take small positions when you're right, you're not going to capitalize on being right. And so you might consider taking larger positions. Like a 5% position, I don't understand why anybody would take a 5% position. I mean, do the math. If the thing goes up 20%, what do you make? You make 1% to your portfolio. And if you're wrong most of the time, and everything you have is a 5% position, let's say you're wrong 15 out of 20 times, you're going to make 5% on 5 of those, and you're going to lose 7.5% on the others, and you're not really going to get anywhere. So I think your whole method is you're too diversified and your selection is flawed. So some people think though,
the whole thing, as Bernard Baruch said, the least important statistic in investment success is your percent that's a win versus your losers. Because he had some years where I'll just talk about myself. Actually, 1997, my hit rate was under 20%. I think only less than 1 out of 5 stocks I bought were profitable, but I was still up just over 100% at 102% because I made it count when I had a winner, and I was very quick to cut my losers. And that's just a general method that everyone I think should adapt to. That doesn't mean you sell and buy exactly where I am, but there should be some sort of proportion between, maybe you are the type of investor who lets a stock come all the way back to the 50-day. You can give a stock a lot of room, but you better make sure if that represents your potential loss, that your potential gain is going to be, at least, 3 to 5 times your potential loss.
Yeah. And you also have to improve your stock selection, I think. That's the other key. And I think a lot of that is just developing experience. And, I've been doing this. I think Dr. K and I have both been doing this for over a quarter century. So,
yep.
We got pretty good, I think I've got pretty good judgment on what's going to move for me, right?
Yeah, the 80s were an interesting period of my going back and forth between, well, all these methods don't seem like they're profitable in the long run, and risk a little bit of money here and there, and spinning my wheels until 1989 when I read How to Make Money in Stocks.
Yeah.
That turned my thinking around completely.
Someone likes the lion in the grass analogy. They point out not being patient has been a big obstacle to overcome. I find that that's what kills a lot of investors, and even Livermore would talk about it, that he always had to have an interest, and he was sometimes, if he would have done better had he waited. And I'm actually rereading Reminiscences of a Stock Operator, and that's why this topic is sort of fresh in my mind, or big in my mind right now, or looming large in my mind. And he would try to act too quickly and not wait for the exact right setup. And I think you just wait for the right setup. If the market's going up big, who cares? Don't worry about it. It doesn't mean you're going to make money. Watch the stocks and figure out where the best setups are. And if they're not there, then don't do anything and wait until you see them. Rather than rushing willy-nilly into the market just because the herd is rushing into the market, and IBD says, market in confirmed uptrend. So, someone says, I'm fairly new, understand you about one's comfort level. If you are looking for best stocks, what criteria do you use for screening? I just look at stocks. You can either use a composite rating over 85 or ERG rating on here, the ERG rating. Where is it? Right here. ERG is like a composite rating on HGS Investor. And these guys, they don't mind. I actually helped them with the development of this intraday volume thing, and they have no problem with me using any of this or showing it. Unlike if I showed a O'Neill chart on the screen here, their lawyers would be calling me up in a tizzy fit. Although I'm not quite sure why that hurts them, because you're showing their product, and I would think that promotes their product. But when you got your head up your I guess you don't really see too clearly. But this is really where I start, this sort of thing. And then there's also another great list here. Let's see if I can find it. Smart Groups, HGSI starters, popular stock categories, new issues. So these are all new issues over, I don't know how many. I'm going to ask these guys. I'm actually having a conference call with Ron and Ian and George in a little while, about a half hour or so. And I'll ask them how they generate this. Maybe we can improve it. But I'm working with them closely to improve this product. And I think with the new intraday features that allow you to see what's happening, the other thing you can do is any list that you put in here. So I have new issues IPO, so you can see which ones are up today on big one. There's Kite. Everybody's seen Kite. Juno's moving. What's this Performance Sports Group? Man, that's interesting. It's in a base. But you can just kind of cruise through here and look at what's moving. And all I do is look for ERG over 180 or composite rating over 85. I'll probably be canceling all my O'Neill services soon because they've gotten this close to what I want it to be, and I use it most of the time anyways. So I think it's great, and this is really where it starts, right in here. And you can go at the end of the day every day, and go in and go to Ian Woodward and Ron Brown here, and I look at this list: groups moving to the upside, groups moving to the downside. If you like cheap stocks, they'll even focus on 1 to 15. So you can look at all the stock stuff, best stocks. These are all great lists to start with. And frankly, I don't think you need any more than this to be very successful investing. The key is it then becomes your selection. There's no magic screen that's going to lead you to the right stock necessarily. Because if you think about it, go back to last year when Tesla started its big run, it didn't have, quote, CAN SLIM characteristics. It didn't, even though they'll call it a model stock now. But it didn't, and so you would have missed it. But you know where it was showing up? Every single freaking day it was showing up on this list. You know, so you could look at this, and you see what's popping and bopping today. What's this Advaxis? Take a look at that. Whoops, what happened there? There it is. Yeah, that thing's moving. And so you start to notice patterns of stocks showing up on these lists. And a lot of times these are all things that are moving. I know Solar City, when it was 19 bucks in early 2013, was a great stock to play, you know. And it never, and I don't think still doesn't fit CAN SLIM characteristics, you know. So you can go, if you have your own buy list too, you can go here. So this is my own, but it's kind of not an updated one. I have on my other machine. It's a little more updated. Whoops, here we go. So if you're looking at this, you know, these are, well, this is filtered with what's up on the day. So I can tell right away most of my stocks, if I remove the filter, now the list expands, and I can see that most of the stuff I like is pulling back on light volume. So let's look at, say, something like Vasco Data. Markets, you know, I think the market might come down lower, but you can see this is pulling in, the volume's light, so it's pulling into the 65-day. Another thing I've noticed in a QE market, and this is something I should probably point out, and I think I've talked about it many times, is when a stock breaks the 50-day, a lot of times it will move down to the 65-day exponential and then get support there. And that's something to watch for, is something breaks the 50-day. Now, everybody sees that, so the whole crowd knows, like, oh my God, it's broken support at the 50-day. But the 65-day exponential is one that the crowd doesn't use, and I think a lot of times what happens is you'll see this the stock find support there. And I remember there's a guy, he used to email me maybe 4 or 5 years ago, and tell me, the 66-day moving averages works, which I guess is very close to 65-day exponential. But our former trader, Bill Griffith, who's now working for a firm out in New Mexico as a trader, running their desk, he told me that the 65 days used a lot by guys, and particularly in the commodity area, I know a lot of guys who use it. So there is some relevance there in terms of some people using it, but not the whole world. Let's see. GLD and silver miners. If we do this, we could probably use this to look at some stuff. Let's see. All securities. Anytime you want to look at the whole market, you have to go to all securities on this. But let's look at the GLD, and it will bring this up for us. You can see that we're starting to show some turn here in these bongos and weekly and daily and the Force 13, Force 2-day, and starting to come up. And you got a little movement above the 65-day exponential here. It's already above the 50-day over the last 5 days, and it looks like it's trying to turn. So if we go to a weekly chart, let's see here. Here we go. Yeah, not so. It doesn't look so hot there, but it does look like on the daily chart. If we go to my secret weapon chart, you can see it's trying to turn. So I think this is a great tool, and it's $599 a year, and it does a lot more for you than MarketSmith could ever hope to, unless you're one of those goofballs who needs to see 5 quarters of earnings up and have a big checklist and return on equity over 20% and blah, blah, blah. I got to tell you, I think that, and I've gone over this many, many times before, everybody has that information, okay? It's nothing, it's not a secret. And so it doesn't give you an edge. I think pocket pivots as buy points give you a huge edge. Bible gap ups as buy points give you a huge edge. Using the voodoo pullbacks gives you a huge edge. And we're going to start actually putting out reports on voodoo pullbacks. So for those of you who don't have time to do a lot of screening or whatever, you'll at least have a list of some stocks, leading stocks that are acting correctly. And I think that'll be helpful. But those work. And buying breakouts doesn't work. And the whole thing of CAN SLIM, I think, is less effective because it's just too obvious, and you're not the only person who knows that a stock has 5 quarters of earnings. So Let's look at the SLV. Let's do something very quickly. What I want to do is you come in here and you intraday update it. So here we go. Market down 152 on the down, Nasdaq down 23. Yeah, they're trying to hang in there, but I don't know. I got some nice profits off the lows, and I'm up to start the year a few percent, and enough just to give me some cushion to think about what I want to do from here. Okay, so that's done. So it takes 10-15 seconds to process, and now we're current as of 15 minutes ago, which I think for the most part is suitable because again, you can take a daily chart from if I want to look at, so let's basically say if I want to look at grub on here and see what's going on, you can see everything's flashing nice and blue. It looks good here, and if you want an exactly up-to-date chart, that's what it looks like on eSignal. So you can go back and forth, and you really get a good picture of what's going on, and so I think it's really valuable. If this thing doesn't sell like hotcakes now, I'll be surprised because I think it's priced very well, and I think these guys, what I really love about George and Ron Brown and Ian Woodward, George Roberts, is that I think they're really trying to provide some value to people, and understanding that there are other systems or software out there where people I think are mostly gouging you and trying to squeeze you for every penny they got, probably because they have newspapers that don't make money to support, but I really think they've work to make a great tool that at a very reasonable price, which understands the needs of the average investor, because not everybody's a multimillionaire. Not everybody's like me, and you can afford to have a Bloomberg and a Wanda and spend 50 grand or 60 grand a year on stuff. And I think that's a key thing for professionals who create this sort of stuff to think about if they're really trying to help people, as opposed to say gouge them. Anyways, getting back to silver. And just so you know, I pay for my own HCS investor software, so they don't pay me anything or give me anything to do this. But I just like it. I paid myself last year using it. But silver doing the same thing. It's very similar. Now, if we go, what's the miners ETF? GDX, Dr. K?
Yeah, that's right.
Yeah, okay. GDX, taking a little time. You can see that's trying to turn, and it's showing some signs of reviving here. But if we go to a weekly chart, yeah, you know what? We'll just go. I'm going to go to a weekly chart on eSignal because you can see it's still way down there. So it's not clear to me that there's any major turn going on here. Any other questions? Let's see. Ants. I like. Yeah, they could put ants on, but I find ants aren't really that useful. Somebody says, I like the commercial about cars where they say professional drivers don't try at home. I think as individual investors we should be less preoccupied in replicating your results than learning your thinking. Yeah, that's really the point of a lot of stuff that we're saying, is that you can't, yeah, some guy emails me, how do I replicate your performance? Well, you can't. I'm a stunt pilot, okay? Unless you want to be a stunt pilot too, and you know how to fly the plane very well, and you can handle doing a 360 barrel roll without puking in the cockpit, then maybe you can do it. Maybe you're more like a Cessna pilot, 152, and you just fly it nice and slow. But I'm more of a Citabria pilot, and I found that I'm definitely not a passenger jet pilot. So nothing like trying to do a 360 barrel roll with a plane full of screaming passengers. Anyways, ants breakout on Ziop. I don't really care. If you want to buy it, go for it. But I'm not going to sit here and endorse it for you. You're probably already long it and just trying to get us to promote your name. So, not going to do it. In the interest of improving HGSI, would they consider creating more stock hunting videos and tips on how to use? Yeah, they're actually working. That's what our conference call is about. This morning actually, in about half an hour. So I'm just working with them to put more and more features on the system and make it more and more useful at a great value, and that's really the bottom line. Isn't that what the new America is all about? New companies, innovative companies providing new products and services that add value and lower cost rather than someone trying to gouge you, make you dependent on their stuff, and then try to gouge you by consistently raising the price or saying, oh, you can have this but pay us more, you can have this but pay us more. these guys are adding all these features, and they're not asking you to pay more. I can remember in 2008 that after the financial crisis, in the institutional side, I heard from a lot of the salesmen there, and they were complaining that right after the 2008 financial crisis, Bill had gone and raised all the prices to the institutions. Now think about this. Your entire customer base is flat on their back because all the institutions got hammered in 2008, and now what you're going to do is you're going to go and raise your prices on them. That sounds like gouging to me. And also tells me that you're not really New America oriented at all in practice, even though you may pay a lot of lip service to it. So, and somebody responds, yes, I feel IBD does try to gouge me. So, yeah, and that's, I guess we'll close out. I just want you guys to know we're going to put on a weekend webinar for $150,000. And you can come in and have your picture taken with Dr. K.
Wait, you brought the price down, what we discussed, Gil.
I thought, oh, is it 200,000? Oh, I'm sorry. It's 200,000.
Oh no, it's 190. It was 199,999.
Oh, it's at 995. I thought. Now you're raising it 4 cents. Okay. Well, I guess that's what we'll do. So, and just so you know, that we've now raised the price of a VoSI subscription to $1,000 a week. So, but to me, the other thing is if you look at our websites. You look at VoSI, $59, and you look at a lot of others. I've always thought that a lot of people charge way too much for their websites, and I always thought around $50 is a reasonable price. And if you're going to make some money off of it, you'll make money on scale, and that's really what we do, I think. If your objective is really to help people, and if you focus on that, I think everything else just kind of falls behind. So that's, anyways. So, someone says, wow, how exciting, can't wait to go. And you know what? You also get, if you're a guitar player, you get to play one of my guitars. All right? So if that doesn't get you titillated, nothing will. Anyways, that's really all I have. I mean, there's a few things. I don't really see anything that wets my whistle here in terms of wanting to get really heavy long. I did it the other day, and that worked. But like I said, it's the ugly duckling theory, and it's a very choppy market. So if you're trying to figure out how to get long this market now, you might be a little bit late, and you might want to wait and see how the pullback plays out, and focus on the voodoo pullback. So I know you all have your buy list, watch lists out there, and just watch your watch list. Get HCSI, and you can monitor everything on an intraday basis, and it's $599 a year, which is what, $50 a month. Don't cancel your VoSI subscription, but whatever other ones you have. Or, don't go out to dinner one day a week or one day a month, and that'll pay for that and probably pay for VoSI as well. So, but, HCSI and VoSI, a great combination as far as I'm concerned. Anyways, you guys, thanks for showing up. We'll catch you guys next week. And take care and be careful. And remember, think before you leap. Be a lion in the grass. Catch you later.
Take care, everyone.